Welcome to your weekly briefing on the Pakistan Stock Exchange. For the week ending December 5th, 2025, we're going to cut through all the noise and give you a really clear picture of what's been driving the market. So, let's dive right in.
You know, if you just glanced at the numbers, you might think it was a pretty quiet week. But trust me, underneath that calm surface, there was a real battle playing out between bullish and bearish forces. So the big question we're tackling today is, what were those hidden currents that really shaped this week's market?
And here's that headline number. The KSE-100 index closed at 16,086 points. Now, that's a gain of 408 points, or just under 0.25%. I mean, it's a positive close, sure, but that tiny number, well, it hides a much more dramatic story of push and pull.
Okay, so to really get that story, we've got to look at the why. What were the key forces at play here? This is where it gets super interesting, because we had a stream of really good news colliding head-on with some pretty concerning economic data.
I want you to think of it like a market tug of war. So, in the positive corner, you had Saudi Arabia rolling over its $3 billion deposit for another year, which is a huge boost for stability. But, in the negative corner, new data showed the trade deficit widened by 33% year-on-year in November, with exports taking a pretty significant hit. It's this exact conflict that created the tension that really defined the entire week.
So, with these powerful opposing forces, how did it all actually shake out in the end? Let's break down which sectors and companies came out on top, and, of course, which ones really felt the pressure. For any investor, this is the stuff that really matters.
Now, take a look at this. What's really striking is just how strong the winning sectors were. Cement was the undisputed champion, adding a massive 535 points to the index. This was all driven by strong local sales and a huge foreign expansion announcement from Lucky Cement. Then you had the E&P sector, that's exploration and production, which also had a fantastic week, adding 351 points, followed by leather and tanneries with a really solid 168-point contribution.
But, and this is a big but, for every winner pushing the market up, there was a loser pulling it right back down. The fertilizer sector, wow, it had a tough week, single-handedly wiping out 538 points from the index. Banks also dragged things down, contributing a negative 265 points, and then investment banks pulled the index down by another 91 points. This just brilliantly illustrates that tug of war we were just talking about.
Let's get even more specific, though. Down at the company level, Lucky Cement, or LUCK, was an absolute star performer, contributing 260 points all on its own. It was followed by OGDC and PPL in that E&P space. But on the flip side, Fauji Fertilizer Company, or FFC, was the single biggest drag on the index, with a massive negative contribution of 545 points. Mizon Bank and Engr Holdings followed behind. You know, seeing the individual players really brings these big sector trends to life.
All right, so we know which sectors moved, but who was actually making the moves? Understanding where the money is flowing from is absolutely key to gauging the market's mood. So let's see which investor groups were buying and which ones were selling. And this chart just lays it all out for us plain and simple. The biggest net buyers? Individuals. They injected a pretty significant $17.8 million into the market. Mutual funds were also definitely in a buying mood, with a net inflow of just over $12 million. Now on the selling side, insurance companies were the dominant force, with a net sell-off of $32.4 million, while foreign investors also continued to be net sellers.
Okay, so that was last week, but what really matters now is what's coming next. Let's shift our focus to the outlook and see what the experts are predicting for the coming days based on this whole climate.
And, you know, the general feeling out there is optimistic. This quote from a market analysis captures the mood perfectly. The focus is absolutely on the upcoming IMF board meeting, with really strong expectations that it's going to unlock that next tranche of funds for Pakistan.
And this positive sentiment, it's really built on solid ground. First, there's that anticipated approval of about $1.2 billion from the IMF. Second, there's a strong likelihood of increased foreign investment, which is being driven by improving international relations. And third, it's the simple fact that local stocks still look pretty attractively valued, with the KSE-100 trading at a price-to-earnings ratio, or PER, of just 8.43x.
And all of this leaves us with the critical question for the days ahead. We've got this strong positive sentiment, we have the promise of significant funds coming in, but will that be enough to overcome the underlying economic pressures and push the market past its current levels to new, sustained highs? Well, that's what we'll all be watching. Thanks for joining this briefing, and we'll see you next week.